Okay, hello and welcome to this eighth lesson in financial accounting. What we're looking at today is correction of errors. So we're going to look at correction of errors as well as the suspense account. So just make sure you follow closely and you understand what I'm trying to share in this lesson. Because suspense accounts they're usually examined, so it's important, it's imperative for you to have that comprehensive understanding. So now, the first thing that we need to look at in this lesson is we need to understand the types of errors which exist, right? So what are the types of errors? So the types of errors, we've got one, the error of transposition. So the error of transposition, this is where two digits in an amount have been recorded the wrong way around. So the typical example is you have 253, right? Then it has been recorded as 235, right? That's an error of transposition. So these two numbers in 235 and 253 have been recorded the other way around. That's an error of transposition. Then error of omission, an entry has been completely missed in the accounts. So this is where an entry has been completely missed in the accounts. This means that entry has not been recorded anywhere. So we've made a sale, but that sale has not been recorded. We made a purchase, but that purchase has not been recorded. We've paid for an expense, but that expense has not been recorded anywhere in the books. That's an error of omission. Then we've got an error of principle. What is an error of principle? So an error of principle results when an entry violates the fundamental principle of accounting or fundamental principle established by the company. So the fundamental principle of accounting is that when we make a sale, we have to record a sale. But here's this bookkeeper or here's this accountant, they make a sale, but what do? They record it as a purchase, right? That's an error of principle. It has violated the fundamental principle of accounting, right? Then we've got the compensating error. So what is a compensating error? A compensating error is where two entries have been entered wrongly such that they cancel out each other. So a compensating error, this is where two entries have been entered wrongly such that they cancel out each other. So a typical example is, let's say, electricity bills, right? This is how I can best explain this. We've got electricity bills, and then here we also have interest received. So when we pay for an electricity bill, we need to debit the electricity bills account, right? Then you credit the cash or bank, depending on how we made the payment. Then for interest, we need to what? We need to debit the cash or bank, and then we credit the interest account, right? But now, what the compensating error entails is that instead of us debiting the expense account, we credit it, right? And then instead of us crediting the interest account, what do? We debit it with the same amount. So we say we received interest of 1,000, and then we also paid expense for electricity bills of 1,000. And then instead of debiting the expense account, we credit it with 1,000. Instead of debiting the interest received account, instead of crediting the interest received account, we debit it with 1,000. I'll repeat that. So instead of us, so we've got an expense of 1,000, and we also have received interest of 1,000. So instead of us debiting the expense for electricity bills, instead of us debiting the electricity bills account, what do? We credit it with 1,000. Instead of us crediting the interest account, what do? We debit it with what? 1,000 account. And then when we're preparing the trial balance, these two entries are going to cancel out each other and won't be able to recognize the error. So that's what a compensating error is, when two entries have been entered wrongly such that they cancel out each other. Then error of original entry. So an error of original entry is the correct double entry has been made but with the wrong amount, right? So you make the correct double entry, you debit the expense account, you credit the cash account, but you make the entries with the wrong amount. So maybe we had an expense of 1,500, but instead of using 1,500, what do? We use 2,000. All right, that way that's going to result into an error of original entry. So you need to understand these three errors. We've got one error of transposition. This is where two digits have been recorded the wrong way around. Error of omission, an entry has not been recorded anywhere in the accounts. Error of principle, an entry, instead of making a sale, instead of recording a sale, we record the purchase. So it violates the fundamental principle of accounting. In compensating error, two entries have been recorded the other way around, such that they cancel out each other. Then original entry, we make the correct double entry, but with the wrong amount. Then there are certain errors which can be identified by the trial balance and others which cannot be identified. So this is just for knowledge's sake. I've never really seen a question. But the errors which can be detected by the trial balance, we've got the error of transposition. So obviously when you make a mistake with two digits, you can be able to tell because the total, the balance won't equal the debit and the credit. Then error of omission. So we recorded one transaction, then the other transaction we've omitted it. It's going to result in the trial balance not balancing, and we're going to detect the error. Then the errors which are not detected by the trial balance, we got the error of principle. All right, the error of principle. Obviously, instead of us recording a sale, we record it as a purchase. So we won't be able to recognize that we've made an error somewhere because eventually the balance is going to equal, because if and only if the double entry has been recorded as it's supposed to be, then yes, won't be able to detect the error. Then compensating error, the result is 0, the net effect is 0, so won't be able to detect this error. Then there are also what we call journal entries. So journal entries are usually used to correct errors which require a debit or an equal credit entry. So maybe there's an error, right? And then you want to correct that error. What we use are journal entries. So these journal entries are used to correct the errors which we have identified using these types of errors: error of transposition, error of omission, error of principle, compensating error, error of original entry. So now if we have those errors, how do we correct them? We correct them using the journal entries. So this is just a typical example of a journal entry. So for example, in the books of DT Co Limited, there was an omission of 2,000 sale invoice to Lungu PLC. So we never recorded it anywhere. All right, it was omitted. So now all we have to do is we need to carry out the double entry for a sale. So what do? We debit the customer account, which is Lungu, with 2,000. Then we credit the sales account with what? 2,000. Then we've corrected the error, because the error was what? Omission. And then example 2, in the books of DT Co Limited, there was a sales invoice of 1,000 to Lungu PLC, right, which was recorded as a purchase. So this is an error of principle. So we make a sale but we record it as a purchase. So the first thing that we need to do for an error of principle, we need to eliminate the purchase entry, right? So we just record the opposite. In other words, we just record the sales entry in the purchases day book and the payables, then the payables account, rather the purchases account and the payables account. So we need to correct the error. That's the first thing. So we need to remove this purchase because it doesn't exist. We need to remove it. So we need to debit the payable account, then we credit the purchases account, because remember, the purchases are always on the debit side, then the payables are always on the credit side. So for us to eliminate that error, we need to make the opposite entry. So we debit the payables account, which is Lungu PLC, the personal customer account, and then we credit the purchases account. That way the purchases value is going to reduce. Why? Because the purchases are on the debit side. Then the other question that you can ask is, you said in the payables account, in the purchases account, there's nothing that's supposed to be on the credit side, but here why are we recording on the credit side? So this is why we have these journal entries. So these journal entries, they don't really affect the separate purchases account. The purchases account is just the way it is. So we make these journal entries to record that transaction which was omitted without really affecting the purchases account. All right. So after we eliminate the purchase, now we need to record the actual sale, how it was supposed to be. So what do? We debit, right, the Lungu PLC account, which is the customer account, and then we credit the sales account. This way we would have corrected the error. So you just have to practice, go through certain questions. I think I'll send the book. There's Frank Wood. Frank Wood is a very good book for these types of transactions, these types of error, these types of questions, practice questions. So with what I've explained, I just try to practice a question in Frank Wood or the exam papers which I sent, and you'll be able to hammer it. Okay, so now let's also look at what we call suspense account. So what is a suspense account? A suspense account is a temporary account which is used when the debits and credits in the trial balance do not equal. All right. So when the debits and credits in the trial balance do not equal, we use the suspense account. And then it is also used when the bookkeeper wants to make an entry but does not know where to post the entry. All right. So maybe we've made a sale. Maybe this bookkeeper does not know where to post the other entry. Right, so you credit the sales account, then you debit the suspense account, and then when you discover later saying, oh, this is where I want to post the account, all right, but I know this is not the way it's supposed to be. This is not the actual setup. So it's supposed to be like this. So we made a sale, but this individual doesn't know how to post a suspense account, so you credit, then you debit. So you credit the sales, that then you debit the suspense account. Yeah. So now here's an example. So I'll cut the lesson here. Then in the next video, part 2 of this lesson, that's where we're going to look at this question. Thank you.